All right. Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, February 1st, and we start take 2 of the year. Welcome everyone in the room, Ted, Ziad, all you guys. It's been an interesting start of the month. You might have seen a little bit lighter of a load. As you guys know, on the monthly crossovers, this is when I'm like the most hands off. Spend most of my time really mapping out the levels, kind of getting ready for what I want to execute on. But the last and first day of the month, oftentimes those moves can be really exaggerated, right, and stretched. So we'll go over the setups that we're following now. I just want to caution everyone in the room, especially as we open up February trade, there is a lot of event risk on tap, starting tomorrow with core inflation out of the Eurozone. Heading into Thursday, you get the BOE interest rate decision, you got the ECB interest rate decision, you got ISM non-manufacturing PMI figures here in the US, and then heading into Friday, you got employment figures from Canada and non-farm payrolls. So the economic docket is absolutely stacked into the close of the week. With that knowledge and recognizing, again, that we're just opening up the monthly opening ranges here, it pays, guys, to be a little bit more reserved, cherry pick your entries, and don't chase, all right? So now that I got that out of the way, let's jump into price action, guys. Today on the menu, we're gonna hit DXY, Euro, Dollar CAD, Aussie Dollar from last night, Gold and SPX, Dollar Yen with just, I don't know what the heck that's doing. We'll take a look at those levels. And Kiwi, I highlighted that setup last week. It broke support, plunged into our first lateral level, and it's kind of sitting there now. So we'll take a look at Kiwi as well. Any other trade setups or questions you guys have? As always, feel free to throw them on the message board at any point. Let's jump right in. I want to start off with Sunday's update because this is what the dollar index looked like at the open of the week. Now, if you guys recall, at the open of the week, we noted that things seem to be a little stretched and that we are looking for a pullback right into the open, right? That was on account of where we are in trend, on account of where we are in momentum, on account of where we are in the start of the month, right? So the focus was to look for a pullback, and we saw that, or we noted that losses should be limited to 96.36, 96.50, okay? If this is gonna hold, we're there right now, all right? So before I get into the scalp, here's what it looks like on the weekly charts. We closed last week right up here at the median line for the ascending formation. We've been following off the lows. Again, we noted in yesterday's webinar the remarkable divergence that we're seeing with price action making a higher high, the oscillator making a lower high. So you got textbook divergence, again, suggesting momentum is waning. You're at resistance on the weekly chart. And here's your first level, okay? This is the objective high week close, or the high close from last year. It's 96.67. 96.50 is that 2020 yearly open, which has been a decent pivot in price. Obviously, nothing matters here, guys, until we get the weekly close, right? So even if this stretches down all the way down here, but we close the week back above, that's a hold. So this is not going to be too helpful for us intra-week, but I just wanted to show you where we're turning from. DXY on the daily chart looks like this. All right. So again, a little peak above the median line. There's the exhaustion clip. Here's the pullback. If we close today below 96.50, guys, you're still looking lower, okay? The 50 of the rally comes in just along that median line. So like 96, 96.70 is bullish in 95.70, excuse me, is bullish invalidation. That's their 618 of the yearly range thus far. That's right above the objective monthly and yearly open right here with those dots. And that's going to be key support. Anything beyond that, you're basically looking for the dollar to really start to fall apart. So where do we look on the intraday chart? Here's what the scalp looked. Ideally, what I was telling you guys on Friday or on Sunday was to look for support here, right? We were looking for the shorts. If you were holding shorts, this is where we bailed. But here we are slipping below, okay? Watch the open of US trade today. The only other thing I wanted to highlight real quick is this slope that you see here in blue. I've modified that again. And guys, let this be a lesson. Here is the inherent problem with being a little too liberal with your slopes. You know, the only change I made to the slope was the gradient, taking it from that high to this high, sort of wraps things up a little bit cleaner. Long story, it puts us at the median line. So I'm looking to see what happens here in US trade today. If we break below there, again, 95.70, the yearly open, 95.67, that's bullish inval for the broader trend. Anything beyond that, and we're basically looking for a run back at the lows. So all things held constant, we're looking for downside exhaustion in the dollar. Okay. If we recover today and you get failure at that slope off the January lows, that would be the tell again that we're going for a deeper correction in the dollar. Now, from a fundamental standpoint, nothing's really shifted, right? And I don't want to take too much stock here, especially with all the US data on tap, right? You got ISM manufacturing, I believe today, 9:45, right after this webinar, manufacturing PMI. This is the final read for January. So I guess the bigger one is going to be the core inflation print tomorrow from Euro. It's going to be the biggest market mover like inherently on the horizon here. And then obviously BOE, ECB, and NFPs. But looking for exhaustion on this dollar pullback. Any questions on DXY before we move on? It's number one. Number two is Euro. I don't necessarily like, well, let me take a step back. I've readjusted this slope again, another lesson about why being too liberal with your slopes kind of gets you in trouble. And I'll show you what the live one looks like now, but here's the daily chart. You guys remember the level that we talked about? 111.03. It's the March high week close. Here's the Euro dollar on the weekly chart. We just missed it with that drop last week. Okay, the low registered at 111.21. The March high we closed was 111.03. Here's the rebound and recovery back above. Again here, we highlighted yesterday building divergence with oscillator making a higher high, price making a lower high. On this trade, it's a little bit tighter. Here's the daily chart. All right, so here's what it looks like on the daily chart. What I'm looking for here, A is 112.90. Just a little bit higher, you have that former channel support. Looking for a reaction there. If Euro rallies through that slope, guys, and closes back above, this would be an objective monthly opening range reversal. What is that? Well, you set the monthly opening range, you break the monthly opening range, gives us a downside bias heading to the end of the month, and we closed on that rally there. If we rally back through and close above here, kind of nullifies that downside bias from last month, and we'd go neutral in that standpoint. So same thing here on the Euro. If this is gonna exhaust, maybe a bit higher from here. I removed the 50 just because it made a lot of noise, but let me just throw it on there again, lighten that. Here's the 50% retracement. Okay, converges on former slope. Okay. And then the upper parallel is right there. So same thing here on this rally, looking for exhaustion either here or on an intraday spike, maybe into the upper parallel, but this would need to hold if the dollar is heading higher, if Euro is heading lower. All right, initial support, I have it back at the December low. That's gonna give you 112.21. A break below 111.86 puts us back on the resumptive track. So something like this would put us back on the resumptive path towards 111 and beyond. But all things held constant, looking for topside exhaustion on the Euro, just a bit higher from where we are now. Any questions on Euro? Little bit of a adjustment to the slope here. Again, it's early in the year, early in the month. You know, I tend to get a little bit just trying to force this slope. So don't go crazy on these, and make sure we're staying really objective to what near-term price action is saying. But here's the old slope, and here's the new slope. Just make that low, and then all these end up being parallels. All right. Eman, morning, Michael. I did my best to be on time, but did no problems, Eman. We just covered DXY. Here's Euro. Same thing on the DXY, right? The downside maybe has got a little bit more to go, but we're essentially looking for some downside exhaustion over the next couple of days. All right, that's 1 and 2. Number 3, one of my favorites thus far, has been dollar CAD. Really, really clean price action. It dropped exactly the zone that we were essentially looking for. Here's what dollar CAD looked like right into the start of the week. We said, keep in mind, I didn't make this an expandable chart. I am sorry about that. We ran into the upper parallel on Friday. And we were basically looking for possible pullback in price. Here's the open of the month of the week. Here's the pullback in price, right into support, right? You got the 38.2 retracement, 126.64. You got the objective yearly open, 26.40. Okay, this now is near-term bullish inval. Okay, even if we intraday spike down here, maybe even tag, as long as we hold this slope in today's close, you're still constructive, right? But you're testing uptrend support. What is the NT support for euro? What do you mean by NT? Near-term support, 112.21, Eman. It's the December low, objective stuff. I don't want to say this is near-term support. This is just the 38 too. So let's actually just dump that. On a pullback, near-term support right here at the December low. Eman says, okay, got you. All caps, thank you. Y'all more than welcome. All right, so dollar CAD. Let me take a quick round trip just to take you down memory lane of where we are on this trade. So came into massive support. We talked about this yesterday. Nice rally. Here's the failure right ahead of the high week reversal close from last year. That's 128.14. The daily chart has us basically pulling back again from that 618 of the decline from the December highs. And again, I'm looking for support into the yearly open if this is going to hold. And that's 126.40. Near-term charts, still within the confines of this pitchfork. Again, area of interest. Look for possible exhaustion here today. Anything below this, 125.85, the 618 of the rally off the yearly low. This is actually the yearly retracement thus far. So keep that in mind. We'll review this again on Thursday, obviously, but the big event risk by dollar CAD's way would be the Friday jobs employment figures, both from the US, non-farm payrolls, and employment change out of Canada. It's 8:30 Eastern on Friday. All right, that is number 3. We're making good time today. Aussie dollar. Here's what Aussie looked like in the last update. So here was last night's update. Beautiful trade. I know Jamie's looking at this just in the right same area I am. Look, Aussie's had a big support. And we talked about this again yesterday. 2020 open, the November lows from that 2020 range, the yearly lows from last year, all had this major support, which Aussie gave us a very strong reaction to previously last year on the December drop. Okay, you got a rally of more than 4 or 5%, 4.5% off that. Here we are again. Okay, here we are again. This is the weekly chart. So that's all to say, a weekly close sub 69.90 is essentially terminal, right, for the bulls. We'd be looking for a stretch down at slope support. We'd be looking for a drop down towards those 2019 low, the 2008, excuse me, low week close. We're going way back with that. So a good area to find a little bit of a support bounce, right? Not too surprising. Again, here's some divergence, real subtle into the lows, price action making a lower low, the oscillator not confirming, excuse me, that low. Here's what Aussie looks like on the daily charts, right? Even within the confines of the near-term pitchfork, this is objective high, low, high. Here's the lower parallel. Here's that critical support zone we're talking about. Here's the reversal. Beautiful play, beautiful play. Now, having said that, and again, as a disclaimer, I actually missed this one, which is kind of regretful, but there's always gonna be more opportunities. With that said, this is near-term resistance. Here's the median line, right? So showing a different picture than some of the other majors. Here's what it looks like on the intraday chart. Basic 38.2 of the decline off the yearly highs. Here's the 38.2. Here's the median line. Real clean, right? So I'm looking for reaction here today, okay? If we get a pump, one thing I was looking at ahead of the webinar, I just want to show you. If this is some sort of corrective stance, 2 equal legs off the high actually still gets you into 7140s, 7142, look right here. So if we do break, still could see an exhaustion off that 75% parallel, off that 100% extension. But at the end of the day, the risk is for topside exhaustion here. Now, guys, look, some of these setups look really clear, and you might be kind of, leaning towards, well, let me try to short this right here at resistance. Again, I want to warn you what we talked about at the beginning of the month, or at the beginning of the session. It's the start of the month, guys. Not our best time for intraday strategies. Heading into major event risk, again, things should start to go a little bit sideways as you get into the close today with the ECB and BOE on tap tomorrow morning. But the levels are clear, I think. The levels are clear. Sorry, Mike, my son has COVID. Oh, I'm so sorry to hear that, Eman, and I have to go look after him. Can we get a quick update for gold as I'm long 1745? Thanks for the levels you always give us. Amazing. Cheers, Eman. I'll be praying for your son. I'm sorry about that. I hope that he gets through that quickly. But yeah, let's go ahead and jump into gold. That's actually, it was actually the next one on the list. So here's number 5, and here's gold. Yeah, the levels have been exquisite. And the clarity, the technical clarity is just there. Look, be careful on that long, okay? I know that you were looking for 1809, but I didn't close as I was away from my computer. All right, let's take a step back here. Remember, Iman, the technical formation that we got on the weekly charts yesterday, I went over this with you guys in the webinar. The outside reversal candle certainly does bode poorly for the bulls. Again, the last 4 outside reversal candles have given meaningful pullbacks. Not talking about trend reversal. We're not talking about, major multi-year highs, but certainly, in gold specifically, the outside reversal pattern tends to be very weighty, right, for price. So it concerns me on the longs because I do think you could possibly make another low into trend support. Even intra-week into that 618, I'll accept. Remember, at the end of the day, this multi-month, it's a yearly consolidation pattern, is heading towards the apex. And like I always say, it's about 10% usually is when you start to see these things give way. So you're sitting at the 52-week moving average here at 1802. Doesn't give you much to do here on the weekly chart. Look at this into the close on Friday. Here's what the daily chart looks like. Nice reversal, and this is why, again, I don't blame you on taking that long. Really nice trade. I just don't want you to get too comfortable in there because, again, big reversal off of uptrend support, off uptrend resistance rather. Here's uptrend support. So in an ideal world with, unicorns and rainbows, you'd think that's actually a great place for this thing to take off, right? Uptrend support off of uptrend resistance, nice spot. However, I'll harken back to that weekly chart. That outside reversal pattern is kind of looming, right? Start of a new month, opening range just taking place, and you're sitting at support. So beautiful trade. I give you all the credit, man, in being able to sort of pull that off. But I'd be cautious. Here's what the intraday chart looks like now. This is a basic 38.2 of the decline. So on its most simplistic, simple correction or pullback, you got the 38.2 here at 1808. Okay, so that's why you were saying, I know you were looking for 1808, but I didn't close it as I was out of my computer. Yeah, so that was the limit for the rebound. So from here, you can see a couple different things that are kind of problematic. Here's the median line. Again, we don't have too much emphasis, guys, on this slope yet because we haven't gotten too many inflection points. The median line breaks and the parallels did give accelerated runs. Here's support at the 25% parallel. If we broke through the median line and this low holds, Eman, right here into the open, yeah, I'd be looking for 1817. Okay, But if we buckle back below that parallel, you start to worry about the resumptive path. Again, 1754 is really the major support that's down here. But all things held constant, it's the start of a new month. Okay, so watch your trade there. I'd have your limit definitely, break even or better at this point. I wouldn't even have it at break even. I'd have it above that. If we crack back below that median line, you could see a decent pullback here. But at the end of the day, if we break 1808, 1817, 1825, I don't think even on a bull trade I sort of try to target. Remember, again, this is the formation we were following off the lows. Support, break of support, that could be resistance. Okay. I'm very interested, Iman, to see how this opens the month. As we all know, the interest rate expectations, and again, I was just doing some more reading, guys, on bank research. It's absolutely insane. The spread on the expectations for rates go all over the place. Literally, you have banks calling for 7 hikes. You have other institutional investors or portfolio managers saying that we could get 50 bips on every hike. The spread is nuts. And that's actually when the market has the most risk for some volatile stuff, because the expectations range from 3 hikes to 7 hikes. And the implications for gold are pretty heavy on that. So I want to see how this starts the month. All things held constant, basically you're bearish below 1817. Okay, even if we were to rally that high, you're still, like I said, former slope support, now resistance. And a stronger dollar is going to continue to kind of weigh on this. So I wouldn't bail on it just yet, Eman, but see how today opens. Again, if we break back below the median line, I would just kind of take a sinker on it. If we rally back into 1817, this actually might be a decent area to behold a short. So we'll see how that pans out, but all things held constant, you're at uptrend support here. So it's going to be the onus on the bulls to push this through, kind of invalidate that outside reversal we had last week. Make sense? All my eyes will watch 1802. Right on. Right on. All right, that is gold, number 5. Number 6, S&P 500. Eman, you're more than welcome. Says thank you so much. It's always a pleasure to have you here, Eman. Again, I'll be praying for your son there. So S&P, here's what it looks like. Man, oh man. All right, you already got guys on Twitter saying V-shaped recovery and all this nonsense. Look, here's the weekly charts, right? Very similar scenario here, right into the start. We talked about, I'm not sure why my marker is way out here, but right into the start of the year, we talked about that outside reversal off the highs, sort of put a gloomy look right into the start of the year. Now we broke uptrend slope support, second uptrend slope support. Here we are testing it as resistance. This is right at the highs that we made in September of last year. The lows we made in that November pullback. Here's slope. So S&P coming up on the first weekly resistance levels near 45.35. What does it look like on the daily chart? Well, even clearer. Here's the daily. Okay. Now, former swing highs, former swing lows, 50% retracement, 45.21, we're there now. Bearish invalidation, 45.91, 618 of the yearly range, and downtrend resistance. That's your breakout for the resumptive move in stocks. Even if we rally this high, you're still within the confines of the downtrend. So keep an eye on this. This is the first resistance zone right here. Okay, I want to see how we open the markets. It's likely you're going to continue to see this thing supported. But again, we're starting out a new month. You got the ECB, BOE on tap. You got non-farm payrolls on Friday. Keep some powder dry here. But if we do breach this region, 45.91 is key resistance. Like I said, bearish invalidation because of the slope. It's the January opening range lows, which broke here on the 17th and gave us that massive drawdown. This is huge. Okay, so looking for possible exhaustion off of one of these two levels if the pain isn't over yet. Here's what it looks like on the intraday chart. So again, this is where the good stuff happens, right? You got really objective slope. There's no liberal sort of matching price action. Here's a low or high, low, high, lower parallel, more or less caught the lows, median line support, break acceleration, median line resistance, median line resistance. A little bit messy here, but here's the breakout. Okay, 45.21 is resistance. Watch the US trade session today. If this breaches, that's critical. That is absolutely critical. Near-term support at the weekly open, that gives you 44.31. At this point, if that breaks, it's going to basically invalidate the uptrend here. This is, again, a very objective low, high, low. That's your bearish, your bullish, excuse me, near-term invalidation level. Questions? Really clean price action here. Really clean price action here. So key resistance 45.92. If we break the downside of this formation, we're still looking for 42.45, and this is really the critical level I was looking for on the initial decline. Remember, a basic 236 retracement of the entire advance from 2020 is right here at 41.97. All right, so the levels are really mapped out pretty well here, guys. Anything northbound of 45.91 is going to dissuade any further any further weakness here, and you'd look for a rally back towards the high day close at 47.95. Questions on SPX? Heading into the start of February trade. All right, just two things I just wanted to touch on here, and then I do want to just show you what's going on in Bitcoin. But dollar yen, my last update, so no change to any of the gold levels, no change to the SPX levels from last night, guys. We're right here right now, okay? So keep those handy heading into the open. Here was the update from the 24th, and I just wanted to look at these levels because unlike Aussie, Kiwi has made a break of major support already, right? Aussie rebounded off it, but I'll bring you back to the weekly chart here. Again, this was published last week. Here's a big support zone that we were looking at. Okay, 38.2 retracement of the advance off 2020, the 2020 yearly open, downtrend support. And we wanted to see what kind of reaction we would get down at that level. On the daily chart, it was the same thing, right? Same thing. A break below here and you were risking a drop towards 65.59. That would have been two equal legs off the high. Also, near-term slope converged there into last week. Here's what it looks like now. First, on the weekly charts. All right, we got 65.59. Okay, big break. What do I always tell you? A break of downtrend support oftentimes can be the sharpest part of the drop. So on this recovery right here, looking for possible failure near 66.50s. Bearish invalidations right here at key support, last year's low, 2020 open, 38.2, 67 to 67.33. So it's really the onus is on the bulls here, or on the bears, to kind of keep this advance tamed. There's no divergence on the daily chart, unlike some of the other trades that we've been looking at, rather the weekly. So I do think this is possibly a pretty significant downside break in Kiwi. Don't forget, later tonight, you do get the New Zealand employment figures and the unemployment rate, expected to be at 3.4%. But this is pretty big. Here's Kiwi on the daily charts. So again, last month, beautiful, clear break of the monthly opening range late in the month, which is exactly what you want to see. 21 had us close the month pretty darn close to the lows. New month opens and you're on the recovery. If this is still heading lower, 67 should be resistance, max on the recovery early in the month. Okay, so I haven't operated on this, but looking at the technical clarity just in slope, this is the original slope, guys. Here's a parallel, 1 touch, 2 touch, 3 touch, perfect, absolutely perfect. On the intraday charts, here's what it looks like. I've been trying to get a gauge on this, guys. I haven't been able to figure a decent slope. Okay, so at the end of the day, we were looking at this pitchfork as we were going through the levels. Here's the break of 67, test of resistance, a break of the descending channel charged the sharpest part of the drop. Now here's the recovery, right? This slope, I mean, you can stretch down to those lows, which work a little better, but I don't want to stress that right now. At the end of the day, former slope support, is this going to be resistance? Even if you get a larger recovery, maybe the dollar has a bigger pullback, retracement of the yearly range, basic 38.2 is up here. Oh, excuse me. Sorry about that. Didn't make much sense. There it is. Okay. Sorry, I have too many extensions from retracements from the way up. So we'll keep the 50, but here's what it looks like on the intraday. If we break this slope, 66, 67, okay, that's the downslope off the yearly high. That's a basic 38.2. And if this formation, if this slope series still is in play, here's the 25% parallel. Support, support, break, resistance, 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 converges right here. All right, could that be the 2-3? I mean, yeah, it could be the 236. I mean, I see your comment. It probably is. It probably is. We're already through it, right? So I don't really chase 236s very often, guys. For me, 38.2 is kind of the initial. Now, if you're talking about SPX, where we have a multi-year rally, we haven't gotten many pullbacks. So yeah, the 236 there makes sense. But here, near-term resistance right now, right here, that's bearish invalidation. Okay. One other measured move I always like to look at, if this is just a corrective sort of recovery, the 100 is basically right here. Okay, so if we do 1, 2, 3, 2 equal legs, gives you 66.27, just a bit higher. Okay, so both of these levels, guys, heading into today, tomorrow, look for possible topside exhaustion there. Again, New Zealand employment figures later tonight. Any questions? That's New Zealand dollar. And number 7. All right, last but not least, dollar yen. Okay, I'm gonna be completely forward with you guys. This thing is super. It's been very volatile lately for dollar yen's part, at least. It's been sailing through the levels. From the weekly chart, it looks like a mess. Okay, this was our big line in the sand. If you guys remember, all of last year and into the start of this year, this was our line in the sand. You had the 2018 high is 786 from the highs that you made back in the late 2017 rally. You had the median line, which was perfect resistance into the open of the year. We pulled right back. Here we are straddling this key range. So from the weekly standpoint, I'm not a fan. And if I'm not a fan on the weekly standpoint, you usually don't get involved in it altogether. But we talked about the divergence into the start of the year, the fact that that was leading to sort of the risk for a pullback. We got the pullback. Last month's opening range never really materialized. So the weekly chart has a sort of ranging here, right at a straddle of a big major level. Here's what it looks like on the daily chart. Okay, this is the pitchfork we've been following since last year. Again, you haven't seen too much respect of that median line. Again, the 25% parallel has been a pivot, but what do you do with a trade like this? And I think there's a lot of indecision here, guys. The markets try to clear out a very sensitive pair to interest rate expectations, a very sensitive pair to US Treasuries. Here's what the US Treasury yield looks like on the 10-year, right? Very similar type of chop, let's say. So look, all things held constant, this is still, for my part, sort of a range-bound play. Now, as we open up the month, here's what it looks like on the intraday. The recovery, and I talked to you guys about this yesterday, looks like a 5-wave pattern. 1, 2, 3 being your most extended wave. This is a 4. So do we look for support here for a new high? Or was this 3, 4, and that's the 5th one? I'm not huge on Elliott, guys. I just like when the wave count is observable and obvious, it can tend to give you sort of an indication, a tell on what you should be looking for. At the end of the day, the 38.2 of the yearly range, here's the decline off of the January highs. This has been a decent pivot. Here's basic uptrend support off the lows, looking for reaction here today. If we get the break, 114, I'd be looking again for 1360s, and that's sort of where we'd want to see the ultimate washout. But all things held constant, you're at support. Resistance at the yearly open, 1509. The weekly open is like 1530, 1527. So the levels are clear as far as resistance is concerned. The only question is what we do at this major pivot. And I tend to think you get a little bit of a bounce here, even though the dollar is tremendous pressure. Looking for a reaction here into the open of US trade. Not my favorite, very low conviction setup, but if anything's going to happen, this is a decent pivot we should be looking for. And in fact, if you take a new retracement just off the lows of the advance here, one other thing I wanted to highlight is, first of all, the 50 is right there in the midst of the support zone we're looking at right now, right here. The 618 is 114.63. So let's do this. Forget this 100% extension. That's major support. Sort of your washout. Anything sub 1430 and you're done. That's the abomination. Not the most convincing, but we'll check to see what happens at this pivot zone right here at 1450 into the open of US trade today. Last but not least, just a quick look. Where would we be if we don't talk about Bitcoin? I actually have an interview with Kitco later today at 10 o'clock. They're asking about my take on Bitcoin. Look, the interesting thing is the rebound off of key support that we were looking at. So if we go back to the daily chart, again, this is an objective high-low high with the pitchfork that we're looking at. The median line is right there. A 618 extension off the high, 1, 2, 3 is right there, 35,392. The low close thus far is 3509. Now, resistance. On the daily chart, I have it right here, essentially. Here's the downslope off the yearly high, nice channel. Here's the lows from September, 39,573. Okay, watch the momentum oscillator today. If we get a daily close, this is a decent trigger. It would suggest again that a more significant low was registered here last month. So looking to see some follow through. The intraday chart I've been working with has a little bit different of a slope, okay? I still have us at resistance. There is the September lows, but a closer look at price action here highlights 4150s as sort of your key region, bearish invalidation. Basic 236 of the entire drop from the record highs we made back in November. 2 equal legs off the low. Again, 1, 2, 3. There is 41.53, 41.45. Both of them converge on downslope resistance. So a little bit of a different picture. Don't get faked out. Here's the side by side. You know what I mean? Even if we break through this, that's still a major level I'll be paying attention to. And that's sort of the resumptive move I'd be looking for Bitcoin. So pain might not be over yet. We possibly still have the threat of another low. 41.45 is what needs to break to validate a reversal in Bitcoin. Ether is at a very similar scenario on the recovery there as well. Not quite as clean, but for Ether, I'm looking for 29.58. That's sort of the line in the sand again, sort of alleviate further downside pressure in that currency or crypto. Very similar scenario, both coming off median line support. Okay, guys, that's everything I have on my charts. Let me know if you have any other questions or trade setups you're looking at. On the stock side of things, there's been a lot of movement. So I just wanted to highlight key support did hold here in Tesla, a stock that I still am involved in. 850, 840, that's still the critical range of support that needs to hold. You're seeing some pretty decent rebounds and everything. Again, disclaimer, I'm holding longs on Microsoft as well. That was a really decent bounce there. And finally, last but not least, Disney is something I've been focused on just because of the tremendous downfall, the massive sell-off. You see huge gaps, slope, basic slope, parallel of the highs, a 1618 extension of the decline off the highs, just lowers the 618 of the entire rally from 2020. So I was looking for support between 126 and 129. I don't know if that's a final rebound, but we're at initial resistance right now. Didn't cover, Steve, dollar Swiss. I think you asked yesterday, brother. I think I missed it in the webinar on Daily FX. Guys, there's literally hundreds of people in that webinar. So if I missed your questions, forgive me. It's really hard to kind of keep track of all those coming through the question board. But here's dollar Swiss. Let's take a quick look. Man, this thing's a mess. Let me go to the weekly charts first. Okay, so this was actually like the September high we closed. It's not the, I mean, this is actually the late month, the late year high we closed, but 93, looks like it held resistance. Yeah, this is one of those trades, Steve, I just can't get a beat on, man. The range has been a mess since the initial stretch here in September. I mean, you're holding the 52-week moving average, but look, gunshot approach, take a pistol to my head, Boutros, I'll blow your brains out. Are you bullish or bearish? I'd have to say I'm looking for support to buy, just on the account of the broader dollar move. Let's take a deeper look here. Yeah, so even like this is why I don't pay attention to these trades, Steve. The technical clarity just, you know, it wanes. Support, support, support along that slope. Then what the hell is this? I mean, you're still kind of pivoting around it. You didn't get a break to the downside. You didn't get a strong rebound to the upside. Last month's opening range did look like it broke, but guess what? We closed at the opening range highs. So I just don't have the technical clarity, Steve. I don't want to give you a bias this way or that. Here's the pitchfork that we were following as long as the advance was concerned. Again, a breach of uptrend resistance, sharpest part of the rally. I hate that this didn't even make it into resistance and turned. So I think you had to kind of rework the levels here. See if there's any technical clarity on this. Bear with me. Let me see what I got here for you, Steve. Okay, so a lot of times a slope that works is just taking a slope off the lows and matching that parallel. Still doesn't give us decent slope. Nah, I'm just not a fan of this, Steve. Look, the most basic of things to look for, I would say, is that 618 retracement, 92, 91.87. I'd be looking for sort of a reaction there if we get it. But this just hasn't been all that clean. Let's sort of clean this up. This is the 786 to the drop. Didn't quite make it there. Resistance, resistance, resistance. Looks like a raised ceiling, okay, which is a turn right ahead of resistance. A lowered floor is a turn right ahead of support. That's your prima facie. That's an exhaustion trade, right? 91.87 is gonna be your first level of support. I'd be looking for a reaction there. Thanks. I'm short. Just seeing if the current downside move is exhausted to close out. Steve, I'd be looking at 91.87. That's the most objective level I could give you as far as just the Fibonacci consideration for the decline. I would have loved if the slope or if the decline sort of had a slope to work with, but this is just too sharp. You have no other former high, low highs to work with. I'd be looking for a reaction there. Also, watch the fact that momentum is heading into or just above oversold here. Here's a 30-minute. No divergence yet. Man, this is really tight. I'm just showing you what I would be looking at if I was getting involved in this kind of position. So again, key support, breakdown, maybe like 91.20s. Resistance 92.70 still. All right. He says, perfect. Thanks. Hey, you're more than welcome. Good luck on that. Nice trade on the short. Nice trade on the short. And we'll keep eyeing this one for you. Maybe we get some further technical clarity as we get deeper through the week. Again, remember, start of the month, just putting in some nice opening ranges, massive event risk on tap with central bank rate decisions from the UK and the ECB heading into non-farm payrolls on Friday. It's going to be a doozy. Keep some powder dry. If you've got some, if you're flat, no worries. The market's is going to always provide. If you're holding shorts on the dollar side, start to clean that up a bit. Okay, start to clean that up a bit. We're looking for some sort of pivot here. If we break and buckle below this median line, again, there's likely to be another drop towards 95.70s. But I think the exhaustion dollar pullback is what we're looking for. So downside exhaustion in the dollar over the next couple of days. All right, no other questions. I'll go ahead and wrap it up here. Best of luck trading, guys, and I will see you bright and early on Thursday morning. Cheers.